Yeah, good morning, traders. Chris Weston here, head of research at Pepperstone. So we just closed out the US markets. It's 10 past 7 in the morning here. We're just looking ahead to the open of the Asian markets. There's definitely some moves that we need to take note of as we go into the new trading session. Some schools of thought. Look, we've got crude now trading 73. 13, so down 2.8% on the session. You've got Brent prices down 2.4, gasoline prices down about 1% or so. We've seen some inventory builds in gasoline. I think that's sort of weighed on the energy complex, and I believe the market is getting somewhat excited, I suppose, a little bit closer together between the Saudis and the UAE, potentially for some sort of agreement on the duration of the output cuts. And I think that's something that the market is expressing through this downside that we're seeing in crude today. Now, that's taken a little bit of wind out the break-even sales. If you look at inflation expectations on 10s, we're trading at 235 at the moment. Now, real yields in the US bond market continue to go lower. What's that saying in itself? But you've got 10-year real treasury rates now trading at negative 101 basis points. So, they're down 5 basis points or so on the session. And, that's obviously putting a bid into the gold price, which we'll have a look at in a second. But the real story here is the continued bid that we see in the US bond market on the nominal curve. You're seeing buying all the way across the curve, but 10s are now trading at 134. They're down 7 basis points in the session. So many people are trying to short these bonds at the moment, and every time you just see buyers coming back in. Now, if you look at what we've seen producer price inflation, PPI, coming out at 1% month on month. The market was looking for about 50 or 60 basis points. So that was a significantly hotter number. I know it's backward looking. It's similar to sort of CPI with a sort of rear view mirror sort of stuff. But the market is, I think, what they're expressing here is that perhaps this inflation is not transitory. Perhaps we're going to see a policy mistake. Now, that's maybe what we're seeing in the bond market. It's certainly not being expressed at the moment in the equity market. We are seeing, participation has been pretty low. The number of companies above their 20-day moving average and 50-day moving average around sort of 50%. So participations in the equity market's not been brilliant. But the real story there has been around what's been happening in rates markets. If you have a look at lumber as well, we just released that as a CFD to clients, and that's down, about 6% as well. So some big moves playing through there. Let's go to the chart. Let's have a look at what we're seeing. I'll have a look at the intraday chart here of the S&P. We had a bit of a pullback into sort of 43.62 in the S&P, and the S&P closing 0.1% higher. In terms of the equity markets, generally it's been a pretty lifeless affair. They've all closed with fairly flat moves. You look under the bonnet, and you can see here the extent by which the sectors have performed. You've seen staples working well, so quite defensive. Utilities working well, so again another sort of very defensive position in terms of the sector's outperformance. Financials down 0.5%. Wells Fargo did try and put some points in. That's had a really big move on earnings. Energy is naturally getting pretty badly beaten up given what we've been seeing in the crude price. That's down 2.9% as a sector. But it has, the S&P, as you can see here, having a bit of a rebound, a fairly whippy session if you put it on the 5-minute chart. Let's have a look at how this is settled on the daily. Yeah, a bit of indecision playing through. We're still holding the 5-day exponential, and it's sort of just grinding high on fairly average participation. The market, which has seen the big move to the downside, which is probably a reflection of rates that have happened. The Russell 2000, the US 2000 market, there really wants to see a steeper curve. It really needs to see long end rates moving higher in terms of yield, and that's not happening. The opposite is true. And the Russell is probably the one where you've seen some volatility. So down 1.6%. Can we sort of continue to grind a little bit lower in the short term? That move that we've seen in the bond market, now what's that done to FX markets? You can see that the dollar is down 0.4%. We tried to make a new high on the session, and bang, it retraced over 50% of the prior day's move. So again, it just continues to fail to break out. I think really what we've been seeing in real rates and nominal rates really sort of taking some wind out of the market there. And we've got euro dollar said, pretty flat on the day. We've got euro dollar trading up about 0.5% or so. The real story, as we can see here from the chart, is really what's happening in the South African rand. We've got that up 1.6% against the dollar. I think that's largely a reflection that the rand has been pretty badly beaten up recently, and probably just seeing some short covering playing through. The Kiwi dollar's been the outstanding trade. We saw the RBNZ coming out yesterday and really emerging as that now default most hawkish central bank in the G10 complex. Not only did they obviously close their asset purchase program, but they are showing and saying that they are at risk of of missing their mandate to the upside. There's not many other central banks that you can say the same of there. So you can see here the Kiwi dollar having a really big move to the upside there. That's probably your more hawkish central bank. You can take some of the emerging market central banks who are raising rates. The Russians, for example, some of the LATAM central banks who are looking to raise rates. But in G10, you've got the New Zealand central bank who are arguably, in my opinion, the most hawkish. And that's probably, if you're looking for central bank divergence, Aussie Kiwi looks like an interesting trade. We're just testing this pivot down here, the 27th of May pivot. Maybe a bit of short covering due at the short term, but you can see now the 5 days is obviously moving really nicely to the downside. I'll be looking to sell rallies in that, because what we do like about the Kiwi is that they are arguably the most hawkish. We've got some central bank, some inflation numbers that are coming through in tomorrow's session. If you get above 3% on headline, the 70% chance of a rate hike, which is priced into the August curve at the moment, will probably go to around 90%, and you're probably going to get Aussie Kiwi through those 106 figure that we're looking at there. So a big move that we've been seeing. Certainly the MEX doing quite nicely. Dollar yen's moved to the downside in given what we've been seeing in the rates market. Let's have a look at gold, because we've seen obviously some big flow in gold. It's broken out of this kind of consolidation range we've been seeing. I'll be doing a gold video a bit later on today, but you can see this really nice move up. That move in real rates has really exploded gold to the upside. We've tested the 200-day moving average. Of course, this has been contained by this 38.2% retracement level. So this is now broken out. The question is can this continue to move higher? Can this trend? Can the gold market trend again and attract a lot of that crypto money, but also some FOMO capital? That's what we're looking out for. We've seen big moves in corn. They've had some nice moves. Soybeans, and those kind of some of the soft and agricultural commodities looking pretty good at the moment. Certainly one for the radar. In terms of crypto, what have we been seeing? Some fairly interesting moves to play through. Pretty lifeless session, as you can see here from Bitcoin. If you take that as a poster child, we try to trade through the uptrend. The market supported that, so it's really hard to see. But what I have seen in the stock side is what's happening in the meme stocks at the moment. Maybe it's a function that the market is saying that liquidity is going to come out of the market. The Fed are getting closer to tapering. Whatever that situation, maybe it's just options flows. Dealers at the moment are probably very much short gamma, and they're having to hedge as the prices are going down. I think the street's been buying puts on AMC and GME, and the dealers are having to hedge that exposure. So you can see AMC, GME, they're down hard. They're 15% on AMC. Let's have a look at the moves that we've been seeing there. That is trending to the downside now. So people are buying puts. The market makers are having to delta hedge that, and that's just perpetuating the move down. So these names need to be on your radar. Apple's had a good move as well. So we're having a look at the markets. Equity markets, it's really about the Russell that's had movement. If you look under the bonnet of what we've been seeing in the S&P, there's good life playing through in sector rotations. Energy's down hard, reflection of what you've seen in WTI. Participation's been quite poor. In the FX markets, the dollar's been under a little bit of pressure, but it's mostly Kiwi, it's mostly the high beta names that have done quite well, and that's a reflection of what we've been seeing in real rates. There's probably some more juice in the tank. We'll have to see. But certainly, we've seen GameStop and those kind of names under a bit of pressure. So there's been some life in markets. But what's happening in the bond market, I guess, is really what everyone's talking about at the moment. So let's see how this trades in the next couple of days.